Hi everyone, this is Sector again. It's 25th of April 2007, about 6 p.m. Euro time, and I want to comment on a setup that I saw. I have on my watch list for the loonie. Well, that's the Canadian dollar. I have a beautiful setup marked, actually since 2 days ago. And today the breakout has happened, and I didn't take it. Marf is low at its best. I've been following this pair for the last 2 days, waiting for it to break up, and when it does, I'm just not there to take it. Anyway, I want to review it for you, so perhaps you might see some points of interest. Well, first of all, as you can see in the 4 hours chart, this is the what I call a perfect trending scenario. We have the price, and parallel to price we have the 30 moving average, and parallel to the 30 moving average we have the 50 moving average, and parallel to the 50 moving average we have the 100 moving average. You see, they all go in the same direction, they are all in order, and they are all parallel to each other. This is what I call a perfect trending scenario. They just don't get any better than this. I haven't seen such a beautiful trending market in, I don't know, in months actually. This is the easiest market condition to trade because there is a massive market sentiment down. You just need to find the proper entry, and it's a very safe trade. Okay, so well, as you can see, I just want to point down that the part that I'm going to comment on this video is this part, the area right before the breakout, this breakout. So please notice that we enter this congestion area from a big move down. You see this move down? Alright. Now let's move into the 1 hour chart. This is the 1 hour chart. As you can see, 2 days ago we had a very clear range bound day. Okay, this is the big move down I was talking before, and 2 days ago, this is today, this is yesterday, this is the day before. Each of these blue squares, it's a trading day. All right, there we are. So big move down, range bound day. You know that markets sometimes they need to breathe, they need to stop a little bit before gathering the energy for another thrust. So sometimes you see these formations, a move down, some breathing room, another thrust down, another breathing time, another thrust down. Is what I call a stairs formation. You see, it seems like you are walking down the stairs. It's actually my favorite type of my favorite formation. It's so easy to trade. Like I say, you know where you want to go. You want to go down. You just need to find the right time. Okay, now, so yeah, yesterday we had this range bound, which if you look at this day in the daily chart, you probably see a doji or a spinning top. Okay, beginning of the day, end of the day, high, low. What's this? It's a spinning top. Then the day after this, so what do we have? We had the day open, the day closed. This is the high, the low. So what's that? That's another doji or another spinning top. So 2 spinning tops in a row. After a big move down. What does it mean? It means you have a big move down, 2 spinning tops, market is gathering energy, boys. market is just taking a breath. What does your common sense tell you? What's gonna happen? Another move down. The market runs down, gathers some energy, another move down. It's so typical. You see this kind of formation over and over and over again. It happens almost every week in one of the currency pairs. So we have two dojis or two spinning tops. Now we just need to wait for the breakout. Well, as you can see, the breakout actually happened here yesterday. You see, we had this level at which we had been ranging off to the upside, well, sideways actually, for the last day and a half. We broke down. You see this retrace bar, the green one? We pierced that down, then we retraced, and this is the 1 hour chart for sure. If you look at the 15 or the 5-minute chart, what you would see is this kind of thing. Bang, bang, and down you go, but since this is the 1 hour chart, you only see a 1 bar retrace. Anyways, a 1 bar pullback, and then as we broke this low, this would have been my trigger for short. Go down, retrace, and make new lows. That would have triggered my short. Why didn't I take it? Because I knew that a few hours later we had the what's probably the single most important fundamental analysis announcement on the forex market, which is the interest rates decision by the central banks. Well, in this case, yesterday, the Bank of Canada was releasing their decision on the interest rates, and of course, you don't want to be in that market. You don't want to be caught up in a position that it might get stopped out at any time, because any fundamental news is going to come and it's going to spike the chart up and down, triggering your stop loss. So that's why I didn't take this entry. It was a very good entry from a technical point of view. It's just that, well, the fundamental release was due to come out. I think it was 3 or 4 hours later, and I didn't want to be in the market. Well, as you can see here, you see this big bar? That's the interest rate decision. So I would have actually been stopped out. That would have been my stop out, and my stop loss. That would have been my entry. Enter, and bang! That would have been stop loss a few hours later. However, there was something very important from this release to analyze as a technical trader. The interest rate decision, even though, like I said before, it's probably the most important fundamental release of the month in the forex market, it couldn't make a new high for today. It just couldn't. You see, that was previous day high, and that's the highest the spike could go after the news. So what do we have? We have a breakout to the downside that was retested, making new lows. The news come out, spike the chart up, but couldn't break either the day's high or the congestion area. You see the resistance level. This is very important to mark. Make always a mental note of where the fundamentals have driven the price